This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. And as we always begin Fridays by saying, and I think it's true, especially this week after all that the market has seen, thank God it's a Friday.
We really say that.
We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Survi and Nigel. Guys, hi, good morning.
Morning.
Good morning, Prashant. Good morning, Nigel. You know what the most important cue, Prashant, today is? The checks that we were speaking of in closing bell. The blue on blue, Mayuresh and Nigel. I don't know, maybe that's got something to do with, maybe we get a turn today, purely the checks.
I mean, I could find a lot of reasons. Maybe we're getting into that oversold zone, but will he bounce today or do we have a couple of more sessions? Well, time will tell. But since it's a Friday, maybe if we dip into the red, maybe I got a bit of a good feeling, start of a new series.
Yeah, no, I mean, I think...
Actually, that means the two of us, yeah.
But that check thing was quite something yesterday. And by the way, when I think you mentioned it, I immediately reckoned, well, this has happened before.
Yeah.
And I think Mayuresh came back and said, well, the last time it happened, the markets
bounced back.
So, well, let's hope for the best, right? But let's just begin with what you need to know in terms of today's trading setup. So the selling continued yesterday as well. Yesterday was the sixth session of the market actually falling. But I want to start by saying that the Nifty and the Bank Nifty are very, very oversold in the near term. I said this yesterday that in a bullish phase, when there are corrections, oversold conditions means that there is a bounce. In bearish phases, and I don't think anyone has really changed their view completely, saying that, well, this is it, and the market's now selling off in a big way. But in a bearish phase, oversold can remain oversold for a long time, and markets can sell off even from extremely oversold levels. So, that's the setup we begin with. Global markets, nevertheless, are the pain point. I think that's been true for some time. So the Nasdaq ended about 1.7% lower. The S&P was down about 1% as well. The S&P, by the way, is now below the psychological support level, which is at about 4,200. We were at 200-day moving average on the S&P just 2 days back, and now that's gone. Of course, 4,200 is also gone. I thought U.S. data last night was strong. You had but maybe for the markets it was not strong enough. I'm just sort of leaving it as a question mark. But I think, and I'm sort of leaving this as a question mark only because the market reaction, especially on the bond market side. So third quarter GDP grew gangbusters, right? 4.9% growth. Some were penciling in 5%, but the consensus was 4.5%. So 4.9 is a significant beat. Initial jobless claims number was also low. So there was not very much to fault as far as the numbers are concerned. But to boot, you also had the Treasury Secretary Yellen, who came out and said that, and this is, by the way, after the GDP numbers, that rates perhaps, and I'm paraphrasing her here, that rates are going to be higher for longer. But look at the reaction. The 10-year lost 11 basis points to 4.84%, right? Monday we got to 5%. Wednesday when we came back, we were at about 4.82. Yesterday we, at one point, were about 4.95 when we started, and we are back at about 4.84. So maybe closer to 5%, people are covering shorts, and actually that's playing out. I mean, some of this is technical in nature, but there seems to be resistance around that 5% odd level. The dollar index, though, climbed up a little bit, not too much. We're above the 106.5 levels. Just one thing. And this is interesting because the market and on the equity side sold off, but the CBOE Wix, which is basically the volatility gauge, the fear gauge, that did not rise above Monday's high, which was 23.08. Markets are significantly lower as compared to Monday on the US side, but the CBOE Wix did not, jump beyond the high for this week so far. Oil, it's worked in a positive way. So oil prices are now at 2%, 88.37. Again, here, we've been between 88 and about 93, 94 or so. Before this Israel-Gaza conflict started, we were at about 88, 87. It looked like we were nicely falling. And then prices spiked up to a recent high of about 93 or so. And we are back at about 88 now. Now, as I said, just to circle back to the levels here, the market here is very oversold. The Nifty daily relative strength index is at about 27. If you look at the hourly RSI, it's now tracking 14.15. Now, this is extremely oversold levels, and hopefully we perhaps get a bounce. I mean, usually we do. 18,700 remains the support level for the market. That's about 1.5% away from where we left off yesterday. Not even that, right? So we'll see. But that's right where we are. And hopefully around here. This is the congestion level, by the way, 18,700 in the June to July period for the Nifty. And we don't go very much below these levels. The Bank Nifty RSI is also quite oversold at 26 odd levels. So again, a bounce expected. Support only though here at 41,570. What is this? This is the 61.8% retracement of the rally from the March bottom, right? 31st of March is when the rally started, all the way to the October high, which is a few days ago. So that is at about 41,570. So Bank Nifty has been much weaker as compared to the Nifty. It's broken through, lots of levels. A confirmation of a reversal or a sustained bounce will only come if we get a first positive daily close. So I think that is what I would watch out for. And I think the importance, I would sort of place more importance on this, since this is also the weekly close. So hopefully today is going to be different as compared to the last many trading sessions or so. But be in no hurry. Let the market tell you that it wants to bounce and it wants to sustain. Because it's going to be choppy. You will get bounces which will get sold into. The market will find a bit of a base and it will take a few sessions and then the reversal will start. One thing is clear, that, the go up and up market that we've had, that, you get a bounce and the market starts to move up, rally up like this row tomorrow once again. I think that phase for now is behind us. So it's going to be more measured, more choppy. And that's why I'm saying don't be in a hurry to get in at the first sign that the market is starting to move up a little bit. The Gift Nifty will come up on your screen. And I think that is indicating an absolutely flattish kind of start, about 17, 18 odd points higher. Surabhi.
Prashant, completely take everything you're saying on board. In fact, I was also going to say that we're starting with what looks like a more benign environment with respect to yields, with respect to, of course, the market being sanguine about the GDP print. But one thing has changed in the last, I think, just couple of minutes or maybe the last half hour. US has struck Syria. So let's not get alarmist here. But these are fresh moving developments on the ground. And we have a statement from the US Defense Secretary. The gist of it seems to be that these are targeted strikes at sort of hostile facilities in Syria. That's what the statement also says. And it goes on to add that the United States does not seek conflict and has no intention nor desire to engage in further hostilities. But these Iranian-backed attacks against U.S. forces are unacceptable and must stop. These narrowly tailored strikes in self-defense were intended solely to protect and defend U.S. personnel in Iraq and Syria. They are separate and distinct from the ongoing conflict between Israel and Hamas and do not constitute a shift in our approach to the Israel-Hamas conflict. So very, very clear statement coming in from the U.S. Secretary of Defense. But markets will, of course, have to go through this and realize that we can't ignore geopolitics, not even for a second. Just when you thought that this seems to be contained until there's some fresh ground offensive, markets can forget about what's happening in the Middle East. Well, I guess that's not the kind of morning that we have today. There's been a slight shift. I mean, yields have cooled off a little bit. So the U.S. 10-year was about 4.87. It's fallen. Natural reaction to any element of uncertainty. There is a rush to U.S. treasuries, and some of that has happened. Interesting moves in the currency market as well. The dollar has actually been a little wobbly. The euro has spiked up in the last hour and a half or so on the back of this. So let's see how the geopolitics plays along. But otherwise, we had a pretty good setup going into trade this morning. As Prashant mentioned, we're talking about oversold markets. So the next level to watch, of course, is the 200 DMA on the Nifty. But that's still a distance from where we are. We're talking about 18,607. That's what we have to look at in terms of the next technical level to watch out for. Volumes were high in the cash market, and there was plenty of selling from foreign institutions once again. Domestic institutions are trying to buy most of it, but not all. 7,700 crores of net sell, about 6,500 crores of net buy. Just a pointer here, the FPI selling has been pretty incessant in the last several months. Last 2 months. That negative sell figure continues for October. And we are down about 14,000 crores again, and we still have a couple of trading sessions left. So there's no denying the outflow of foreign money that we've seen in the last 2 months. This week, however, we keep talking about this, these oversold levels. Nifty is down 3.5%. The mid-cap index is down 4.5%. The small-cap index is down 4%, and that was already showing signs of some sort of a bounce. There was intense small-cap buying going on in the market yesterday. So let's see if we get any more of that. Also, lots of results. So beyond all these global headlines, I think there'll be some focus on what's happening here at home as well. There's Reliance after the bell. We'll hear from Maruti, Dr. Reddy's, Cipla, and a couple of very interesting mid-caps as well, large mid-caps. SRF, I could count it in that list, Indian Hotels, Mahindra & Mahindra Financial Services. So lots to keep us busy. But Nigel, one would just hope that we don't need more negative geopolitical headlines so that we can get that bounce. Dead cat or not, but hopefully a bounce.
Well, in terms of the big FI sell number, kudos to all the investors and all the domestic funds as well. Because if you told me that, there's going to be an FI net sell of $1 billion and the markets are going to be down, 100, 200 points, or you'll take it with both hands, 1.5%. In the past, if you saw $1 billion of selling, well, the markets could have been down much more. So keep those SIPs going, keep the faith, because in the longer term, that's what's going to make you money. So stay invested is all I'll say, and gradually you could start allocating as well. Now, yesterday, if you look at it on the Nifty, there was expiry that played out. So you pull up the intraday chart, you'll see that the Nifty, any kind of bounce was getting sold into. So that was a pressure pocket. But just take a look at the advance decline ratio. At one point of time, there were only 200 stocks that were advancing. By the end of the trading session, they almost wanted to get closer to each other. So the number of stocks advancing, I'll read that positively. How are the FIs positioned at the start of a new series? Well, they have close to around 89% of their positions on the short side. That's a big net short number that we're talking about. And on the option side, well, they've written calls very, very aggressively. They've written close to around 7 lakh calls odd. Last 6 sessions, we have lost 950 points approximately. So there's good enough reason to see a bit of a bounce, whether it's a dead cat bounce, whether it gets sold into. The trajectory is down, but at least it's possible that we see a couple of 100 points bounce from these levels. And you'll be worried, the FIs are net short. That's a big worry, right? The last time they were this net short was at the start of the April series. And take a look at what happened. You had an 800-point rally out there. So this time around as well, they're similar in terms of the net short positions. You'll be hoping that maybe we could pull back, and the FIs will be clutching on to this data point. The other factor is the FI absolute net short position has crossed 1.5 lakh. The last time we saw it was on March 28th. And at that point of time, the markets made the low, and from there we did bounce up. Just pull up the March 28th close. That was at around 16,950. That was the lowest that we saw in that phase. From that time, we haven't seen that number yet again. And the next few sessions, we had a bit of a bounce. So short point is the bulls will want to count on these FI net short positions, and not such a bad thing, and refer to the historical data that I put up for you on the screen. Pulling up the levels then, well, the Nifty on the upside, on the downside, in fact, let's look at that number first. The 200 DMA, that's very, very, very important. That's 250 points away from current levels, while resistance comes in at around 19,200 to 19,350. Why is that mark important? That's 19,350 because it's the neckline of the head and shoulder breakdown. So that's the important technical mark that we're looking at. After that, you look at the 100 DMA. So in the near term, we're bracing for a bit of a bounce. We have a 20-point downtick, I think, is what the Gift Nifty is suggesting. Maybe you get a bit of a deeper downtick, and then you look to buy into. For the starters, it's going to be flattish. You'll want to buy the dip today, trail your stop loss, and hope that you get a couple of 100 points bounce.
Okay, let's see if that bounce indeed comes along. Let's get moving then with the equity call of the morning. This is coming in from Chris Wood of Jefferies, who says, from a market standpoint, greed and fear senses that markets will continue to try to ignore events in West Asia so long as no invasion is launched. He says, indeed, this can even trigger something of a relief trade, allowing the stock market to ignore for a while longer the native implications of uncomfortably high bond yields. He adds, meanwhile, if greed and fear is wrong and the invasion is launched, there will be an immediate negative impact in terms of a spike in the oil prices and renewed concerns of a broader regional conflict, concerns which, unfortunately, will be quite legitimate.
Okay, well, let's get you some money market views as well. We have Lakshman V of Federal Bank, who says that on the back of strong consumer and government spending, the US GDP expanded at its fastest quarterly pace in nearly 2 years. Supporting the US Federal Reserve's narrative of higher for longer, he says the rupee is consistently under pressure due to persistent outflows in equities coupled with elevated US Treasury yields. He expects the rupee to trade between 83.05 to 83.48 for the next few trading sessions.
On bonds, Lakshmanan says bond yields remain in a narrow range in recent sessions, broadly following US Treasuries. He says RBI MPC minutes were as expected, with members cautious on the inflation front. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.45% in the coming sessions.
Well, we've got a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. We're looking at Sun Pharma, Dixon Tech, Vodafone Idea, Railtel, Avas Finances, Home First Finance, Karnataka Bank, and AGI Green Tech. All of them on the back of positive news flow, while on the flip side, you have Colgate and NLC India.